Hello everyone, welcome back to my channel Currency News Hub. I hope you are doing well. I pray for you all. God give you a long life and you live always happily there. Please like and share this video and also subscribe my YouTube channel. I have a request to you all, watch this video till end for supporting me. So let's start with the information. These are some updates on Twitter. Before starting the video, I have to tell you something. Go to google.com and search jaropinions.com and open this site. Here you can see the latest news, dinar opinions and dinar guru updates on a single page, so visit this site for more information. All we are looking for now to some degree is when are they going show these amendments to be law. We heard different things about the president having to sign, not sign. We have 15 days time frames and people are debating on when that time frame starts. Was it June 3rd or was it the day he received it? Do we know the exact day he received it? I don't, but we know our time is short. Once the amendments are passed into law, we'd like to think that prior to that they're going to expose the new real effective exchange rate and probably mention they've done the project to delete this zeros which get you the nominal effective exchange rate. Oil experts are saying Saudi Arabia did not resign up their agreement to deal oil and US dollars. It was an 8-year agreement. They're telling us Iraqi citizens on our television this will strengthen the local currency. Basically they're saying that it is a float of the Iraqi dinar that is helping us get away from the American dollar, so the Iraqi currency will be stronger. The next step is to float. Are you curious about the future of currencies? Specifically, will all currencies float? Today we are diving deep into a fascinating topic to uncover the truth behind currencies like the Iraqi dinar, Vietnamese dong and more. Stay tuned to discover why the idea of a floating currency might not be as straightforward as it seems. Are all currencies going to float? That's the burning question on many people's minds, especially those invested in currencies like the Iraqi dinar and Vietnamese dong. But before we get into the gritty details, let's a moment to understand why this topic is so important. And this first, let's start by defining what a floating currency actually means. Unlike a fixed exchange rate where a currency's value is pegged to another currency or a basket of currencies, a floating currency's value is determined by the foreign exchange market. This means that the value of a floating currency can fluctuate based on supply and demand, making it more volatile. So are all currencies going to float eventually? The truth is it's highly unlikely. Many countries choose to peg their currencies to assets like gold or other stable currencies to provide stability and control over their economy. For example, the Iraqi dinar is pegged to the US dollar, which helps maintain a stable exchange rate and lower inflation. When it comes to currencies like the Vietnamese dong, the government maintains a tight control over its value to prevent wild fluctuations that could harm the economy. This pegging strategy has been successful in stabilizing the dong and attracting foreign investment. However, there are risks associated with pegging a currency to a fixed rate. If the pegged currency's value becomes overvalued or undervalued compared to its assets, it can lead to economic imbalances and potential financial crises. That's why some countries choose to let their currencies float freely to allow market forces to determine their value. Despite the benefits of a floating currency, it's essential to consider the unique circumstances of each country before deciding on a currency regime. Factors like economic stability, inflation rates, and trading partners all play a crucial role in determining the best approach for a country's currency. In the case case of currencies like the Iraqi Dinar and Vietnamese Dong, it's unlikely that they will move to a fully floating exchange rate in the near future. The pegging strategy has proved effective in providing stability and attracting investment, making it a viable option for these economies. As we wrap up our discussion today, remember that the future of currencies is a complex and multifaceted issue. While the idea of a floating currency has its advantages, the pegging strategy offers unique benefits for countries like Iraq and Vietnam. Keep exploring and learning about the world of currencies to gain a deeper understanding of how the global economy operates. Thank you for watching, and don't forget to like, share and comment with your thoughts on today's topic.